You ever notice how some companies become so intertwined with their leader that it's hard to tell where one ends and the other begins? Well, something caught my attention lately that perfectly illustrates this, and it's all about Tesla and its enigmatic CEO, Elon Musk. We've all seen the headlines, right? Musk is a force of nature, a visionary, but also, let's be honest, a bit of a lightning rod for controversy. And it makes you wonder, is all that drama, all those public squabbles, actually starting to hit Tesla where it hurts? In its bottom line? In its brand? In its very future? It's a question that's been buzzing around, and when you dig into the numbers and the stories, it gets pretty fascinating. So let's unpack this, because it's not as simple as it might seem on the surface. And hey, if you find this kind of deep dive into the world of business and its fascinating personalities as intriguing as I do, consider hitting that subscribe button. We're always exploring the stories behind the headlines, and you won't want to miss what's coming next. Now, back to Tesla. For years, Tesla was this unstoppable juggernaut, right? It was the disruptor, the innovator, the company that made electric vehicles cool, desirable, even a status symbol. Elon Musk was the rock star CEO, the guy who dared to dream big, who launched rockets, dug tunnels, and oh yeah, built electric cars that everyone suddenly wanted. He was the face of the brand, the driving force, and for a long time, that was a huge asset. His charisma, his audacious goals, his direct communication style, it all resonated with a certain segment of the market, the early adopters, the tech enthusiasts, the people who wanted to be part of something revolutionary. They bought into the vision, not just the car. But here's the thing about being so closely tied to a larger-than-life personality. When that personality starts generating a lot of, shall we say, unconventional headlines, it can start to cast a shadow. And that's exactly what we're seeing with Tesla right now. It's not just about the cars anymore, it's about the man behind the wheel, and whether his off-road excursions into political commentary and social media drama are derailing the company's carefully constructed image. Think about it. Tesla was once synonymous with sustainability, innovation, a cleaner future. Now, for some, it's becoming associated with political polarization, controversial statements, and a CEO who seems to thrive on pushing boundaries, sometimes to the point of alienating potential customers. This isn't just idle speculation. There's a growing body of evidence suggesting that these controversies are indeed having a tangible impact. We're talking about real-world consequences, from declining sales figures to a noticeable shift in public perception. It's a complex picture because Tesla also faces other challenges, like increased competition and an aging product line. But the Musk factor? That's a unique variable, and it's one that's proving increasingly difficult to ignore. Let's start with the big picture. Recent reports from sources like the BBC are pointing to something significant. Tesla's challenges, they say, run deeper than just the controversies surrounding Elon Musk. And while that's true, the market is getting crowded, and Tesla's models, once cutting edge, are starting to show their age. It's also clear that Musk's actions are absolutely contributing to the problem. There's a palpable backlash building, a sense of buyer's remorse, or perhaps more accurately, pre-buyer's remorse among some consumers. We're seeing protests outside Tesla dealerships, not just in the US, but across Canada, the UK, Germany, and even Portugal. These aren't just polite picket lines. There have been instances of vandalism, even cars being set on fire in France and Germany. It's a level of anger and frustration that goes beyond typical brand loyalty or dissatisfaction with a product. It speaks to a deeper ideological divide, where the car itself becomes a symbol of something people either embrace or vehemently reject. And that's a dangerous place for any brand to be. When your product becomes a political statement, you risk alienating a significant portion of the market, regardless of the quality of your engineering or the efficiency of your batteries. It's a phenomenon that some are calling Tesla shame. Imagine owning a Tesla, being proud of its innovation and environmental credentials, only to find yourself increasingly uncomfortable with the public persona of its founder. It's like wearing a band t-shirt, only to discover the lead singer has started saying things you fundamentally disagree with. For some, it's reached a point where they're actively considering selling their Teslas, not because of mechanical issues, but because they simply don't want to be associated with the brand's current image. This isn't just anecdotal. Surveys are starting to pick up on this sentiment. For instance, some research indicates that in the EU and Canada, Musk's activities have indeed harmed Tesla's brand perception. Interestingly, China, one of Tesla's biggest markets, seems less affected by these controversies, suggesting a cultural or political difference in how Musk's public statements are perceived. But in the West, where free speech and political alignment are often more closely scrutinized, the impact is clear. And this Tesla shame isn't just a feeling, it's translating into hard numbers. The sales figures are telling a story that's hard to ignore. For the first time in over a decade, Tesla's global sales actually fell in 2024. We're talking a drop from 1.81 million to 1.79 million vehicles. Now, on the surface, that might not sound like a massive plunge, but for a company that has been defined by explosive growth, any decline is a major red flag. And the profits? They were down too. This isn't just a blip, it's a shift in trajectory. The start of 2025 has been even more concerning, especially in Europe. In January alone, new registrations for Tesla vehicles plummeted by a staggering 45% compared to the same month in 2024. That's nearly half. And it wasn't just a one-off. Major European markets saw further declines in February. Even the UK, which was an outlier with a 21% rise, couldn't offset the broader trend. And if you look at the shipments of Chinese-made Teslas, which are sold both in China and internationally, they fell by more than 49% in the same month. These are not small numbers. These are significant contractions in key markets, and they paint a picture of a company struggling to maintain its momentum. Wall Street analysts are taking notice. Joseph Spack, an analyst at UBS, actually predicted a 5% decline in Tesla's worldwide sales for 2025. This was a bold prediction, especially considering the market was expecting a 10% growth. And what happened? Tesla's share price tumbled. It dropped 15% in a single day, adding to an overall decline of 40% since the beginning of the year. Think about that. 40% of market value wiped out in a few months. That's a massive hit, and it reflects investor concern, not just about sales, but about the perceived stability and future direction of the company. Now, Tesla has tried to explain some of these sales drops by saying they were gearing up for the launch of a new Model Y. And sure, that's a plausible factor. But when you combine it with the brand perception issues, the increasing competition, and the sheer volume of negative headlines surrounding the CEO, it starts to look like a perfect storm. It's not just one thing, it's a confluence of factors, and the Musk factor is undeniably a significant one. Let's dig a little deeper into the financial data, because the quarterly reports from investing.com really underscore this trend of underperformance. When you look at the revenue figures, it's clear that Tesla has been consistently missing its own projections and those of analysts. For example, in the first quarter of 2025, Tesla's revenue came in at $19.34 billion, but the projection was $21.4 billion. That's a nearly 10% miss, a difference of minus 9.63% from what was expected. That's not just a slight deviation, that's a significant shortfall. And it's not an isolated incident. If you look back at the fourth quarter of 2024, revenue was $25.71 billion against a projection of $27.23 billion, a miss of minus 5.58%. The third quarter of 2024 saw a smaller miss, minus 0.87%, but still a miss. And while there were a couple of quarters in 2024 and 2023 where they actually beat projections, the overall trend, especially in the more recent past, shows a struggle to meet expectations. This pattern of missing revenue targets is a big deal for investors. It signals that the company isn't growing as fast as anticipated, and it raises questions about its ability to execute on its plans. For a company like Tesla, which has always been valued for its growth potential and its disruptive innovation, these kinds of misses can be particularly damaging. It erodes confidence, and it makes investors wonder if the best days are behind it. And this brings us back to the specific impacts of Musk's actions. The Veja article, for instance, highlights that 13% global sales drop in the first 3 months of 2025, and it really zeroes in on the situation in Norway. Now, why is Norway so important? Because it's a global leader in EV adoption. Over 90% of new car sales there are electric. So if Tesla is struggling in Norway, a market that is literally built for EVs, that's a huge red flag. Tesla's sales there dropped by over 12%, and the company fell from being the top EV seller to third place, behind Volkswagen and Toyota. Think about that. In a country where almost everyone is buying an EV, Tesla is losing ground. That's not just about market saturation, it's about losing competitive edge and perhaps losing appeal. And this is where the Tesla shame really comes into play.
The article mentions that some consumers are actively reselling their Teslas because they're uncomfortable with Elon Musk's public image. He's been seen as increasingly involved in controversial political statements, supporting far-right parties, and even making accusations against political leaders. For many, a car is an extension of their identity, and if the brand's leader is associated with views they find abhorrent, it creates a moral dilemma. It's no longer just a car, it's a statement, and for some, it's a statement they no longer want to make. This isn't just about a few disgruntled customers, it's about a shift in the broader cultural perception of the brand. It's about the subtle yet powerful influence that a CEO's public persona can have on consumer behavior. When you buy a Tesla, you're not just buying a vehicle, you're buying into a vision, a philosophy, and for many, that vision was once aligned with progress and a cleaner future. But as Musk's public statements have become more divisive, that alignment has fractured for a significant portion of the market. And it's not just in Norway. This trend of declining sales and negative sentiment is being observed across other European markets like Denmark, France, the Netherlands, and Sweden. These are all significant EV markets, and Tesla's struggles there indicate a systemic issue, not just an isolated problem. The protests and vandalism we talked about earlier, they're a physical manifestation of this growing discontent. When people are so angry that they're willing to damage property, it's a sign that the brand has crossed a line for them. It's a visceral reaction to what they perceive as a betrayal of the values they once associated with Tesla. So, is Tesla paying the price for Musk's squabbles? The answer, when you look at the data and the market sentiment, seems to be a resounding yes. It's not the only factor, to be clear. The automotive industry is incredibly competitive, and Tesla's product lineup, while still strong, hasn't seen the kind of revolutionary updates that once set it apart. Other manufacturers have caught up, offering compelling EV options that appeal to a wider range of consumers. The novelty factor of Tesla has worn off for some, and now they're looking at practicalities, price, and yes, brand values. But Elon Musk's personal brand, which was once Tesla's greatest asset, is now for many becoming its biggest liability.
His controversial statements, his political endorsements, his seemingly impulsive decisions, they're all contributing to a narrative that is increasingly alienating a segment of the market that Tesla desperately needs to continue its growth trajectory. It's a fascinating case study in how deeply intertwined a company can become with its founder, and the immense risks that come with that level of personal branding. For years, Musk was the visionary, the eccentric genius who could do no wrong in the eyes of his most ardent supporters. But as his public persona has evolved, or perhaps devolved for some, the shine has come off the Tesla brand. It's a stark reminder that in today's hyper-connected world, the actions and words of a CEO can have far-reaching consequences, extending beyond the boardroom and into the hearts and minds of consumers. And for Tesla, a company that built its empire on aspiration and innovation, that shift in perception could be its most significant challenge yet. It's not just about selling cars anymore. It's about winning back trust, rebuilding a brand image that has been fractured, and navigating a market that is no longer willing to overlook the controversies for the sake of the technology. It's a long road ahead, and it will be interesting to see how Tesla and Elon Musk choose to navigate it. Will they double down on the current strategy, or will there be a pivot to try and mend fences with a disillusioned customer base? Only time will tell, but one thing is clear: the price of controversy is proving to be quite steep for the electric vehicle giant. It's a story that continues to unfold, and one that offers valuable lessons for any company and any leader in the public eye. The line between personal brand and corporate brand has never blurrier, and Tesla is feeling the full force of that reality right now. This isn't just a fleeting trend, it's a fundamental shift in how consumers perceive and interact with brands, especially those led by highly visible and vocal figures. The era of the quiet, behind-the-scenes CEO seems to be fading, replaced by leaders who are often as much public figures as they are business executives. And with that increased visibility comes increased scrutiny and a greater potential for their personal actions to impact their professional endeavors. The Tesla story serves as a powerful cautionary tale, illustrating the delicate balance between innovation, leadership, and public perception in the modern business landscape. And that, my friends, is a wrap on this deep dive.
If you enjoyed this conversation, don't forget to subscribe for more insights like this. We're always here to break down the complex world around us, one fascinating story at a time. Until next time.